Jose, thanks for being with us today on Crypto Weekly.
Thank you so much.
Let's talk about the trends you're seeing. The crypto custody industry has evolved a lot over the last couple of years. Where do you see the future of crypto custody evolve, and what are the big trends we should watch for?
Thank you, Henri. Thank you for having me here. For sure. I think what we see currently in the market is more and more institutions are actually want to get exposed to crypto. Maybe, 2-3 years in the past, we will have say that, maybe they were exploring about it, maybe they were considering about it. That is not the case anymore. The institutions are here. They are putting their balance sheet into assets that they had not before done. And now they're more than excited to explore multiple assets, not only traditional in terms of Bitcoin and Ethereum, but they're actually looking to expose their balance sheet to multiple assets in here.
What would you say are the biggest security threats crypto custodians are facing today?
So right now, when you are running, let's say, a custodian company, you want to make sure that internally everything is protected, that, you want to make sure there is no internal malpractice, that there's enough policies, procedures. What we see our clients when they're doing their due diligence for us, they want to make sure that what we have in place comes from a place of authenticity, that we have been a couple of years in the market, that we're backed by strong organizations, that we have expertise, and that is challenging. It's an industry that it's been built through trust, that has been built through time, and it's not something you can just pretty much just come and deploy money and want people to just come and say, hey, it is simply it's something that takes a little bit of time.
But what are you at the same time that there's so many crypto custodians right now in the market? Like many would argue the industry is becoming kind of commoditized. How do you differentiate between different custodians, and how do you think that's going to evolve over the coming years?
Yes. So it is true that nowadays, particularly in an industry that has been now for some time, creating a wallet or providing someone with an address that they can take a deposit on crypto is not necessarily as exciting as it was 3, 4, 5 years ago. What I believe crypto custodians need to do is provide additional features that we understand are outside of table stakes, right? So particularly one thing that we are proud of is giving something like cryptographic independence. So we give guarantees to our clients that the addresses have been generated within our premises. We believe regulators, for instance, are going to take a look at where those crypto keys are being generated, what infrastructure is located to make sure that there are no geopolitical conflicts. And that is something that we already see happening in other jurisdictions, right? So Hong Kong, for instance, just to give you an example, make sure that the wallets that their clients are using and their institutions are using are generating within the region. It is not surprising or will not surprise us that as we continue growing and this industry continues maturing, we'll see our regulators that are going to have requiring that organization and institutions that are operating within a particular, let's say, free zone, they will want or require a custodian located in that free zone. At the end of the day, they might want someone, knock the door and make sure that they are there.
So when you look at the emerging technologies, whether blockchain or smart contracts, how do you see them being integrated for a crypto custodian? Yes,
so it is very common for custodians to have technologies like HSMs, deploy infrastructure like MPC. Very often in a traditional DeFi world, you have a smart contracts that maybe require multi-sigs from clients to be able to connect on that. Depending on your appetite, you might prefer having, someone that you are able to do everything for you, right? That's what a custodian does. But I see that there will be a trend where not only the smart contracts will be perhaps a replacement to some of the custodians in the future. Hopefully not, but there will definitely be institutions that will be say like, well, maybe something alternative. And I see there's even non-incumbent players that will deploy decentralized custodians that could actually happen. We'll see what is happening in the AI world that, you will have AI agents or bots that will eventually be able to be part of your policies of your premises. It could be something that we'll see in the future. Right now, I think the appetite is still on the very centralized, I see who is behind my wallet and who's taking care of my assets, but I see it could be probably happen in the future.
Interesting. If we see institutional investors get comfortable with self-custody, that'll be very, very interesting. I want to talk about also the UAE. Obviously, you're based here in the region. What are you seeing in terms of the crypto developments, in particular with regards to custody within the broader UAE?
Yes. So the UAE is a fascinating industry. I relocated from Switzerland, where you have a very unified central authority that makes sure that, regulatory is embodied in one single mandate. The UAE has multiple jurisdictions in terms of how it operates, has multiple regulators that they have different appetite on how they are able to tackle the market. And the benefit there is you can target the jurisdiction that fits better your business, right? So we see very traditional financial players go to the IFC, right? Where they say you have the FSA that it's able to actually operate on, let's say, more conservative crypto assets, a very limited amount of crypto assets, but that it is enough for financial institutions that want to get exposed to the asset class. Then we have Bara in Dubai, which has multiple free zones where you can operate, World Trade Center, the MCC. And at that point in time, Bara, I think, is one of the largest one that it's able to cater to brokers, exchanges, BASPs, and has a very dynamic framework that allows you to, expose your crypto business in multiple ways or form. Then if you go a little bit later, you go a little bit more in the east, you have, of course, Abu Dhabi, right? So Abu Dhabi, capital of the capital, as we like to say it. The Abu Dhabi global market, the FSRA, is one of the most mature, very good for institutional, strong backing organizations. And the FSRA, which is the regulator behind the digital asset framework there, has very good mandates and a very good structures on how do you want to operate the business, right? We also recently see Rakdao as a new non-incumbent player in the regulatory business. But I mean, that only tells you about all the options you have to be able to deploy a crypto business in the UAE.
It's a good place, I guess, for a crypto custodian and a lot of developments on that perspective. Thanks for being with us today, Jose. That was Jose Perez Aguinaga, the co-founder and CEO of Tungsten.
Thank you so much. Thank you guys for having me here.
Are your children prepared for the future of money? Order Decoding Crypto with Henri and Hodler, the #1 new release kids book on Amazon.